money in the bank.
Rates are good. Pretty exciting.
You know why?
Welcome back. Thanks for staying with us. This is your Real Estate Chalk Talk, the free money segment of the big program.
Yeah, it
Kelvin.
seemed like you talked.
So are you
into it kind of fast?
Are you trying to do less business, like the insurance, like James is doing?
Not on purpose.
Not on purpose.
No,
okay.
but I think we are. I can tell you we are doing less business than we were. Now I'm starting to pick up spam calls just to talk to people because it's kind of nice, just have some conversation, encourage them, hope they're having a good day. But it's a little bit slower on our side. When rates are kind of mid sevens ish, boy, that's tough. It's just a little tougher. So you just have to have one right frame of mind to go into that. Right, you have to see if you can solve other problems. One of the things we always talk about: what problem did you solve this week? One of the things you got to be thinking is you got to think globally when you're talking to people now, because what other, is there other debt we can get rid of? Is there high interest debt? Because mortgage rates are not the only thing that are going up. So are car rates, so are credit card rates.
And mortgage rate is still probably the lowest.
Well, for sure. Home equity lines of credit, I have a home equity line of credit just because I have no balance on it, but just because, I just got it's 9.5% now. Just letting you know when you use this 9.5, wow, that's shocking from 4.5 that it was just, a year ago. So it's interesting. It's interesting this week. We're at 22-year highs now on rates. I've been doing this 21, so my whole career has been a downward, and now we've jumped up fast, which is great. I'm happy we're going up fast because I need time to come back down again, and we'll run that again, so we'll be okay. But it's a different conversation.
It is.
We're looking at, it's a tough combination because home values. It's not like, you know what, Keith, rates are a little higher, but home values are coming down.
Yeah.
Thank goodness. So we're equaling out, and we're still okay. So everybody locks arms and sings a song. No, you guys jamming prices up, right? In real estate market, go, more,
good at our job.
Yeah, great job. And then we're sitting there going, shoot, rates have done that too. So now it's just making that payment a little higher.
The affordability index is like the worst it's been.
Well, remember when we used to do the affordability bubble?
Yeah.
It's like, oh, it's coming down. Hey, everybody can afford a home.
Right.
Well, you can't afford a home and you can't afford to rent.
Right.
So now you're at James' place in the basement seeing if you can get a bedroom for a couple $100.
And he can't afford to let us.
No, and he won't even let us come there. So we got a problem.
Yeah.
Yep. So
I read an article this week that said that's the lowest volume since 1995.
Well, there was an article this morning I was reading in Prep. It talked about banks writing off business and Freddie and Fannie recovering all this money and all this. Well, you know why that is? Because things have slowed down, that everybody's looking at things more closely.
Right.
So I was talking to Tom Fiddler, who's my boss, and he said, man, the amount of pushback we're getting from Freddie and Fannie and
what kind of pushback?
Anything on the loan, like, where in the past, like, they didn't even have time. Like, oh, look, good. Now they're like, can you get us another pay stub? Can you? Post-closing requirements are crazy. Hey, we saw we missed an initial here. We'd like your client to initial this. Oh, we'd like to. And they're just pushing back on every flipping thing. It's crazy right now. So they're spending a lot of time and energy defending our underwriting decisions, because an advantage of Loan Depot is we get loans done. I mean, we find ways to get things done, and it's great, and we have great resources. We got a couple people internally to say, hey, I can't get my arms around this one. Give me some feedback. And they're like, hey, try this, or get the association docs and pull out water in this, and you can use a lower fee. I mean, all these different strategies to just make deals work. Well, when everybody has time to scrutinize everything, boy, it's a lot of time and energy to go back through all of those.
And justify it to somebody.
So we have some of that going on. Rates-wise, we're still in that low 7s, mid-7 range. With lower credit, we were talking at coffee this morning. I just ran some numbers at a 660 credit score. You can still get those done. I mean, we can get down to 520 on FHA with 10% down, but the rate's going to be ugly. But we were looking, I mean, it's like you're talking 7.99 right now with a 660 score. So it's pretty dramatic.
799.
7.99, keep you right under 8. And then if you get a 760 score, then you're at par. So that credit's always been important, right? But man, it's really important.
So what is that higher score?
Then you're at 7.9. You'd probably quote that one at 7.25. With a point.
Okay.
So everybody, the other thing we talked about too is everything. I always say with a point.
Mm-hmm.
That means 1% of the loan value as a discount to basically
now, is that on
help
top
buy
of the origination fee? Because
There's
back
no
in the day,
origination fee.
yeah, okay. So back in the day, I mean, everything had a point.
Yeah.
It was always a 1% origination fee.
Yeah.
Always.
Oh yeah, that's how we get paid. The 1%. That's all.
Yeah.
So it's a discount that we're buying that rate down.
Okay.
That we're just trying to help people get. What's really hard, right, is everybody's like, oh my gosh, rates are so high, and like everybody's making less money, and we call it this race to the bottom. Yeah, who's going to run out of money first? Thankfully, at Loan Depot, we have a lot of money, so we can maintain. We can keep doing this. But a lot of companies, my boss keeps saying, hey, just hang in there. We need rates to be high for another 60, 90 days because we'll wash out another handful of big companies. And so I get the perspective, but people just don't have the runway. He always talks about we have a lot of runway, so we're good. So we got to, now we're recruiting well right now because a lot of companies are raising the rates even more because they're like, hey, less volume, we got to make it somewhere.
Right.
Kind of like the insurance world. Let's put our rates up.
Mm-hmm.
So in terms of interest rates, we're beating the market all day, right? And we're talking to all of our friends. We've been around for 20 years, so you're talking to all your friends in the industry. We are winning. We win literally on every deal, but it's because we have enough runway that we're not having to do what everyone else is doing yet.
Okay.
So that's good.
Kind of hard to feel sorry for the insurance companies and the mortgage companies because when you go to a big city,
here it comes.
What are the big buildings that are downtown? Whose names are on them? It's always mortgage companies.
No, it's not mortgage
and
companies.
Banks, mortgage companies, insurance companies. They got the big buildings and all the fancy buildings and all the downtown.
I wish that was the case. Now, banks, I agree. I can't believe all the Chase locations popping up all over.
Yeah,
the
they're
state.
coming back into Minnesota.
Man, they're
Chase.
coming with
Bank of America will do the same thing. You'll see them coming in
It's
too.
interesting.
Yeah.
So a couple other things I want to touch on. How many days in August do you think interest rates got better?
How many?
3. Just because we're running out of time, so I got to hammer through stuff.
Okay.
3 days in August, rates have gotten better. This week we had one
But
of
they
those
didn't
days.
stay better.
No, this week we got a little reprieve,
Okay.
so things are good. So let's at least have conversations. Everybody's going to Jackson Hole right now. They have the big conference with all the
I thought they're going
central.
to State Fair.
If they're not at the State Fair,
They're going to Jackson Hole.
and you're a central banker from around the world, you might go to Jackson Hole, talk about the economy in your country, and then Jerome Powell is going to come out and talk about, what his view on the U.S. economy. That's today, Friday. So we'll see what that comes out. He's still talking like, hey, we still have inflation.
Mm-hmm.
And it's interesting when you look at the jobs report and some of the numbers that come back, and people may or may not care, but understand the number you see is always like, oh my gosh, inflation. And then the following month, it's revised down.
Yeah. So
all these numbers they're given every month has been revised down. So it's like, it's not true. You don't always see the truth, So it'll be interesting.
And when they revise it down, it's quietly revised down.
Yeah. So it'll be interesting. They're talking about doing another rate hike now.
Yeah, I know.
It's just like, doggone it. Let's just leave everything alone for a little bit. So that was good. In the first segment, Keith, you talked about the NAR lawsuits. Give just literally a 30-second what you see happening, because this segment's really popular online. A lot of people watch.
Oh, I'm sure it is. So what we see now is that as a result of the NAR lawsuit, just the pressure that's put on the industry, you're going to start seeing that the requirement for publishing the buyer agent's compensation and offering it is going to go away. They want the buyer agent to sign a contract with their client and clearly lay out how they're going to get paid.
Okay.
So the question is, and this is where the challenge comes in, is a lot of buyers have all they can do just to buy the house.
Yep.
So how are they going to now pay the buyer? Because the lawsuit is going to say the seller can't pay it anymore. So how you do that, and it puts pressure on your industry to figure out how they're going to finance it. Just like, there's washers and dryers in the house too now that they always used to exclude, and now it's just pre-baked into it's become kind of a norm, an industry norm.
Don't you think, Keith? I think of two things right as you're saying that in terms of what how we would solve that. One, you'd increase the value of that home. So you're going to buy something for 300. Maybe you now are going to do it for 306, and 6,000
gets paid
back, and then that 6 goes to the,
just like we do with closing costs.
Yeah, you do it with closing costs, but it is going to have a little pressure then on how much you qualify.
Sure.
Now we're baking more in.
Yep. It all comes down.
I don't love that.
It all comes down to rates
Mm-hmm.
and buyer qualification, because at 3% buyer can qualify to do all that
Yep.
stuff. At 8%,
A little tougher.
to work that out, and so that will put
Yeah.
a downward pressure on the price of the house,
Yep.
because you just don't have people that can qualify to do that.
Yeah. Well, hey, give me a call regardless. Let's have a conversation, or just maybe we talk about the election or the debates that we're just on, and we have a lot of things we can talk about.
Riveting conversation.
Just because we're running out of time here. So Kelvin Kaemingk, Loan Depot, 651-231-2500. Again, 651-231-2500. Love to have a conversation just because no one's calling me.
This is your Real Estate Chalk Talk, HittnerGroup.com. We'll see you next week.
You've been listening to your Real Estate Chalk Talk.